Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles, a chassis in the intraday developing timeframes. It's based on structured trades. These are available to all of you at no cost, as well as the Trader Lab community, which is a group of like-minded traders who come together to leverage their collective experience. This is about the business of trading, building sustainability, understanding how the market works, why it does what it does, and how at times to get in alignment with it. And the idea is to build out a structured process that you can develop that fits your own psychology and the time frame or rotations that you want to operate in. And the thing about trading is it's very much an individual process, though there are, you might say, certain laws of the universe or market mechanics that display themselves on a regular basis. However, those behaviors are also random. So we operate in an environment of randomness, but we need to also put some order to it so we can operate in randomness and get away from the idea that we can predict anything. If you can accept randomness, then maybe you can solve for randomness, but never get to certainty. So instead of seeking certainty in spite of random winners, if you don't have an edge in spite of winners, which we all have, and takes no edge or anything, you could use a random buy-sell generator and have winners, which ought to be the super hint. Then maybe what you need to do is not focus on winners, but focus on edge. In other words, over time, where do the dollars flow? In spite of winning trades, are they flowing to the other participants, or are they flowing to you? That's the nature of the business. Now, I want to caution everybody, I'm streaming from Costa Rica. I have a substantial hardware problem here. I've already crashed a number of times today, and it's been really nasty. So as I do the stream today, there's going to be incomplete information, holes in the data, and I apologize. Unfortunately, it's a bit out of my control, and since I'm sitting in the jungle over here, it makes it even a little bit more challenging. So please bear with and please accept my apologies. Let's take care of business, and I've got some exciting news for you guys. That's going to be a little bit of a surprise, as they say. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get there, we talk. Also, please remember, if I crash and disappear, it's not intentional. It'll take me about 5 minutes to recycle. And if you're in YouTube and you're following the stream, thanks for visiting. But I will return. It just takes time for me to recycle because this computer will just, as they say, go south of the border. And I realize I'm sitting on the equator, but I am also south of the border. So I'm already south of the border. Now maybe the computer might go south of the border. Now here's what's a special opportunity for you. Right at the end of this stream today, there's going to be a special webinar with Scott Pulcini. Scott Pulcini was a high-volume ES trader. He would dance, if you might say, between the institutions. He can give you some terrific insights on large player behavior and also how to integrate order flow into your trading. Now, here's the thing that you don't know. First of all, it's going to be right after this stream. Number two, it's going to be in the Discord only, the Bookmap Discord server. That means if you're visiting in YouTube, you need to use the link down below and verify your username, and then you gain access to all this additional education, all available at no cost. But you need to do it today because this is going to happen at 1 p.m. Eastern Standard Time, right at the end of this stream. And now here's, as we say, the icing on the proverbial financial cake. If you attend the live stream, Bookmap and Tradier are going to be giving away for 3 winners 6-month Global Plus license. Now, it doesn't include data, but you would get 6 months of Global Plus, and there's for 3 participants, but there is one thing required. You must be present during the live stream. So if you're interested in taking advantage of a high tier order flow tool like Bookmap, and you want to get your, as we say, your toe in the financial water, attend this, be there, but you must attend. And if you're visiting in YouTube and you've been following this stream and other education provided by Bookmap, this is the time. Use the link in the bottom of YouTube, and not only can you register for this special webinar, you can win 6 months of Global Plus. That's for 3 winners. Data's not included. And also, you can join the Trader Lab community, which is also available to you at no cost. Let's move forward. Hope you guys appreciate that. Hope you get something out of today's stream. Remember, I am in Costa Rica with a substantial problem. If I drop out, I will, as they say, return. The other piece to this is I had tremendous technical problems this morning, and there are going to be holes, crashes, and all kinds of ridiculousness here. So I'm going to do my best. Levels are not available. Things are kind of messed up. So I'm going to try. And you notice the timing of this right at RTH open. Tell me that isn't a good time to lose data. So I don't have a picture of the open. And levels are also wiped out. I can get some of it back here, but here. Whoops, this is the current. Now, my plan for this morning, and because of all these problems, I was not aware of things that were going on. I was too busy trying to recover from crashes. But I want to bring you back. Here's another crash over here. Imagine trying to trade from here. Actually, trading from here is workable, but crashing computer, not so good. Okay, RTH open. Now, here's what's important. And I completely, because when this happened at the open, my brain went, kind of evaporated, which I think you might understand. By the way, if you're in YouTube, I'm not able to see your questions. Visit the Bookmap Trader Lab. You can use the link there. There's no cost for it. I'm actually looking at the Discord chat on my phone. Okay, so RTH open, no clue. But let's look at the levels here. ETH low, yesterday's low. This was the primary target yesterday, if you remember from the stream. And it went a bit further. I had this and then this. These were and this is yesterday's low. So yesterday was a pretty nice day, you might say, right? So, and today, now let's take a look at a couple things here. Now, my plan coming in was if the market is short, and kind of the way the market tends to operate is the market, and I always like to say this, but it might seem trite, but it's really market mechanics. The market goes down to go up, and the market goes up to go down. It rotates over itself. Now, obviously, it doesn't have to do that. It can go down, 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 and we can have breakaway gaps if there's something really material going on. But when we had the Greenland news, it was over a weekend, and then we had Martin Luther King here where the RTH was closed. So we had a gap, and then traders are trapped, basically, who are longs were trapped, which gives us yesterday's move down long liquidation. Now, when the longs liquidate, you also get shorts in the market. So for me, given that we had hit key locations below, and I'm just giving you my plan for the day. It doesn't make it a good one. It just is what it is. I was looking for short squeeze and then continuation selling, at least for rotations. Now, the problem, of course, with a short squeeze is short to wear. But I am aware that I had hit some important locations below. So I know I have over 90% probability to take out ETH high low, and I have to try to find these statistics. Don't hold me to them. We opened, kind of hard to do this when you don't have your levels. I'm going to say taking out the previous high or low is around 80-ish% or more probability. what's important to note here is yesterday's low. Here's the RTH open, assuming it's correct. It should be. These are being exported from Investor RT. And then we have the overnight mid, the volume point of control. So this is a high probability. This is a high probability. This is a key level. This is a key level. So my orientation initially, notwithstanding I don't know what's going on here, is for squeeze and then to potentially come down. That's my plan initially. Now, the joy with squeezes is to where? So that's when I started with the idea. Now, when the crash happened, I was very distracted. So everything, and I'm not making excuses, I'm saying is basically this is just what happened. Everything got scrambled for me. So I was trying to get everything going quickly, and I actually forgot about this. Because this is key. So my orientation then was to look for the shorts. But I know in my plan, which kind of went out the window for a while, that this is material. So I was looking for this, squeeze, and then continuation. That was what I was looking for. But I also know this is very important. So anyway, that went out the window. So, and now I'm not trading from here, guys. If you tried to trade in a condition like this, you deserve to be flogged because this is not where anybody ought to trade. Now, in here, so I have a over 90% probability to take out ETH high low. And this is a low volume zone from yesterday. So I know if it's a low volume zone, I can come up in here. And if I fill this area up, I can then potentially fade it to come back. So I was thinking mean reversion initially. So just telling you, that's what the idea was. So I was looking for shorts. And this was an area out here for potential short. Guys, things are very shaky here, technically. So this is our outside edge and value area high. So I was looking out here after we got through this statistic out to this low volume area and the value area high, which is a reasonable statistic for the fade. So again, and I did lose consciousness literally of this, but it doesn't take away from the potential for a reversion trade. So let's look. And then my data went out again. So this was an area that I was considering would be a short. So I don't have the information here, but I would tell you that this is where I'd be looking for reversion. And this is actually a trade here that I would take, notwithstanding what I don't know down below. And that would be, and I don't know if this is correct, by the way, these locations, because everything is jammed up. So this is a trigger for me for a short. I'm going to show it to you. And it was, if I was not in a vacuum and I had this, but let's assume this is here and I don't know. This is an outside edge. And again, it's created by this hole in the data. And I really don't know if it exists. So if this was an outside edge and I was thinking I would fade it at this point, then I'd be looking, this is a short. And this is a order flow trigger here. Value area high. Absorption here, liquidity comes in the book, break low. This is now resistance. It's right here. Test. So if you took a short here, your stop would be above here. Value area high. Now there's another thing we have to be aware of. At 9 a.m. Central Time, we get what's called the IB30. There's a high probability if we take out the first half hour's high, which is right here, and it's aligned with value area, that if we get back above here, In other words, there's a good probability we're going to keep going up. But my objective here, if I took this trade live, and I'm only reading it, and I have no idea. Again, this is a big problem, right? So if this is too high, I can come back here. This is a counter trend reversion trade. So if my plan for the day initially was squeeze and then continuation reversion shorts. That's how it started. First, you were asking me about this. So, and again, I don't know if this is accurate. So this would be a short out here. And then if it comes out here, if this is an LVN, then it has to break below here to keep going down and revert out here. If it can't get outside, then it can come back and then we can potentially go higher. That's the plan. So that was the short FIRS if it's from what I've seen. And again, I don't have the information here. That was a short for me. Would be a short. It wasn't. I can't trade from here. And then we come up again. Now, so here I'm through the IB 30. At 9:30 Central Time, the IB is set. Now this right here sets up a short. Now these are counter trend. So let's take a look. Here's a sweep. Here's resting liquidity. Now right here, I already know I have over 90% probability to take out this high. And I know, so this is counter trend, okay? And I know I got yesterday's high on the hip parade, and there's going to be buy stops there. I know that. So if I take a short here, I am now counter trend. Okay? But let me show you the trigger. And again, counter trend. Now there's going to be two trades that are going to show up here. This trade here is a counter trend trade, just so you know. And here's how this works. And this is a trigger. Buyers into the liquidity through the value area high. Okay, breaking out of value. Buy stops above through the liquidity. These are sellers. These are sellers. And now I get the sweep. And I have resting liquidity here. I have over 90% probability to take this out. So if I do take a short and fade this, basically it's counter trend. And I want you to know. So I know it's a counter trend trade. So here's a sweep. This is an order flow trigger. This microstructure, I'm just going to show you a trigger too here. This is like your VPOC in the microstructure. So let's look at the components. Absorption, sweep, break low, sellers below the buyers, high volume, break low. This is micro reversion. This is a short trigger. Then the idea is counter trend to come back and come below this volume and potentially come out here and maybe the long ball, get under this swing and get to the VWAP in mid, and then potentially along to come back for the statistic. That's what makes this counter trend. Now, remember, over 90% probability to take out the first hour's high or low. I think we can agree it'll be the high, and yesterday's high is above us. Let's look. So this sets up a short. This is the entry, or here. Stop is here. Sweep here says potential counter rotation. Let's see what it does. You would be scaled. And again, I don't know if this is accurate, guys. You can tell me, is this a VHVN up here at 82.25? Is this accurate? I don't think it is, but you could tell me. How about a Trader Lab? Yes, no. Is this a VHVN? Is this accurate 82.25? Okay, so there's no VHVN right here, right? Is that correct? Oh, it is accurate. We need to use IRT and 82. Okay, thank you. So this is I call these variable high volume nodes. It's based off of the volume here. When this rotates up, moves up, this suggests this is the new fair price and that I can now come up. So let's see what it does. So if we take a short from here, the goal is to get risk neutral and come out here and get back here for reversion longs. So this is counter trend, remember that. Now, what would happen here is you'd be risk neutral, you get taken out. This sets up another order flow trigger here, and it's a long for the IB continuation trade. So if you didn't take the short counter trend, you'd be looking for the long structured trade. And look at this. I'm going to try to show you as best as I can what this is, because this is very structured. And for developing traders, this is really what you want to work on. This is called the IB continuation trade. We had our sellers here, and we had our sweep, and that gives us this thing, the counter rotation. When we can't get down to the VWAP in the mid, and this is up here, then this is the fair price. So the best I thought about this was out here, back here for a long continuation. So counter trend or whatever. And if this is not a long, because it didn't come outside. So the other way around this is this, and this is the order flow trigger right there. This is a long, and this is called the IB continuation trade, and the goal is yesterday's high. Here. And that's the target. So what you could do with this is, when we break this order flow right here, this liquidity, I mean, here's a sweep. What we anticipate is a counter rotation. This is so you could manage this trade under there. See the trigger, see the order flow, break high, order flow, trigger or support, break high, where's your support? It's here. Break high, now right here, it's resistance. Break high, trend up, support. Break high, what is this? Support, right under here. Break high, what is this? Support. Where am I trying to go? Up here, and then continue higher. What's this? Resistance. So what do you do with this? Well, once you get up here and you see the sweep, you could be out of the trade because this has over an 80% probability. What else do we know? There's buy stops over yesterday's high, right? Now, if we can't continue higher from here, then what do you do? Order flow, order flow. This is important. Here, let me show you. Now, this is subject to your plan. You know, whether or not you want to take a short or you're just out of the long, this is subject to time frame and your plan. So do we think the trend is up? Well, on the intraday it is. What about the intermediate? Is it up or down? Well, that's subject to what time frame you operate in. My plan for the day was short squeeze. And the fact that it's up here, you know, that's a nice thing, but my job is not to predict, so my job's alignment. Well, now that I've gotten the buy stops out, am I going to get buyers above this high or have I just squeezed? That's the question. So subject to my time frame, and I don't know if, is this accurate? No, this is not accurate. Hold on. Did the VPOC, the VHVN get to 05? Guys, can you confirm that in Trader Lab? Okay, great. This is a Trader Lab structured trade. Here's how it works. First of all, sweep. So I see the sweep here. This is suggesting counter rotation. My support is here. I break high. This is support. I get a sweep here. I break high. This is support. I have sweeps here, support, going to the moon, right? Anybody know? Me, not so much. Break low. Change in behavior. Where did it change? Here. VPOC migration. What's the possibilities? Break high? Or if this becomes too high and I break low, I now have resistance here. So I can be selling this as a counter trend, subject to a counter trend trader. And I'd be looking at this to scale because that's where we broke out and we took our longs, which was over here, I think. So there to out, trade management, break low, location, you got this. So if you can sell this, fine. If you can't, you can be selling this with a stop up here or up there, subject to what works for you. Scale at the IB. I haven't seen any of this, but these are just process trades. Where are we here? In short, you know, wherever we are, we are. I don't even know where we are. Where are we? There we are. So my thesis for the day was short squeeze, get short continuation trades. And this is not a right or wrong. This is a time frame thing. So I did miss the element of yesterday's low and the naked VPOC below us. Otherwise, I'd be more inclined to be thinking about the long side earlier. So for me, the only long I would have in this would be the IBC, and now I'd be short again. So I was out of alignment. But I think there were 3 shorts altogether that I saw. Maybe 1 stop, 2 scales, a little bit of profit, the IBC long, and then the short here would be the trades I'd be on. So, you know, it's just trading. I can't say, since I have holes in the data, exactly what would happen on the long side earlier because I can't tell. So I just don't have it. I can't tell you, you know? Does that make some sense? Anyway, that's the best I got for you based on the problems here, and I hope you're okay with that. This is a Trader Lab structured short. Look where it's in alignment, and look where we got. We got the squeeze. I just, you know, what's interesting about trading is we don't know what it'll do. We might be able to figure out where it might do it, and then it's an alignment issue. If I come out the bottom, now we have what's called the neutral day, and I'm still on, you know, looking for this thing to come down, and this is possible to come back under here, or at least under here. So that's the trade. So all day, this would be the trade, looking to get short to come out, maybe down here. And this I can't tell you anything about except what is the trend in the higher time frame. This is also, as they say, in the eye of the beholder. For me, it's shorts. So it's short squeeze, short continuation trades. So if you're going to trade the squeeze, you can do that. If you want to trade counter trend, subject to how you perceive trend, you can do that. Intraday, the trend was up, but it was a short squeeze, maybe. And then after we squeeze, whatever level that's at, then it's continuation shorts. That's what this is. Does that make sense? And here's the thing about it. Subject to time frame, it could be a long for you. In other words, you could be on the long side and not even be thinking about the shorts. So what's the right answer? Is there a right answer? How about this? There is no right answer. It's not my answer, it's yours. What's your plan? How do you understand how the market works? And I think this is very elusive. A lot of traders say, well, I don't know if I should be long or short. And I'm going to say, well, what's the time frame you're operating in? Because that is the answer. As day traders, we operate in multiple time frames. We don't have to trade multiple time frames. Some traders are going to look at the higher time frame and think maybe we're in a bear market now. And if we are, then they can anticipate the possibility of short squeezes and short continuation trades. Other traders in shorter time frames are going to trade long, short in a shorter rotation. Does that make sense? Can you see kind of the dilemma? Why one size doesn't fit all, but it's the alignment. So depending on time frame, you could be trading either side. So this is where the question is, what's right to do? That's all about plan and how you slice the time frame up. So it's a vertical integration of time frames. So if I take a short in here, I might only be going to a location to get long. Or if I think the trend is down, I'm only going to be taking shorts. If I see a long with a high probability target above, I can take the long here, which is structured trade, to go into the stops here because I'm squeezing. Once I get through here, if I don't get buyers above here, who are the buyers? The shorts. Now I have what? I have the short squeezed out and I have new longs. What happens to the longs? They become sellers. What do I want to do? I want to join whichever side is in control in my time frame. I hope that's making some sense. Is this a little too ambiguous or conflicted? This is, and by the way, if you're in Discord, I can only see Discord. I'm not able to open multiple windows here because this computer can throw a fit, and it's really having a problem. This was a short, maybe right here. Yeah, I don't remember. I think it was this. So this was this. And then the long was here to there. The short sets here or here. And then you're scaling, depending where you take this thing, IB, this outside edge, which is this, if this is accurate, which I think it might be, and then come across back in alignment with the higher time frame. Is this making some sense? And if you're in Discord, I just need to know you can hear me because I won't be able to tell what's going on with this. So how do you resolve these questions about where do you trade, when do you trade, and how do you get an alignment? How do you resolve that? Isn't that the question? In Trader Lab, let me ask you, is this the major conflict for you? What side to trade from? What time frame? Is the side in control or under the bus? Who's going to get squeezed? In shorter time frames, both sides can get rotated over, you see? So how do you stretch out these time frames, slow down your trading? What I found, and I think for developing traders, the idea is less trades, more range. Every time you put a trade on, of course, you're taking risk. Well, does your probability of, if you shorten your time frame, you're shortening your range potentially, but your risk stays equal. So is it less trades, pretty much equal risk, but more range? Does that work better? Do you know? I think it's a pretty important question. So when I get this question from traders, well, how do I know? What should I do? I'm going to say you have to find your sweet spot and what aligns with you psychologically. When you're developing, you're going to be more subject to impulses, FOMO, and all that. So I believe, and it's just something I've observed, that most traders do it the opposite way. It's fast, more, and they're all tied up in dopamine and adrenaline and endorphins. Developing traders should always do the opposite of the impulse. The impulse is more, but the business is really something less. It's patience. So you need patience. You need to anticipate where trades will show up. Mentally, you have to adjust yourself. Where might it go? Once we know the shorts are being squeezed, and it's a kind of a where might it go? Nobody has the answer. Not our job. Right? If it's not our job, it's alignment, realignment, taking the trades that we vetted, and then thinking about the trend in a higher time frame, which is down, and alignment to take out. What did we do today? Think about the beauty of the market. The market went, I think the RTH open is somewhere around here. Couldn't tell you. Let me try to look at this. Yeah, right here with data hole right at the open. So squeeze the shorts, get long, get short. So even if you took some stops on the way up, you're still having a wonderful day because the market is random. It's your plan. And your plan, you need to define alignment in your time frame. I personally, and it's never a recommendation, I try to align with what I perceive to be the dominant side because I'm trading for that. So if I take a stop or what, and everybody does, and I lose a couple of points, I think this covers it. What do you think? Evan, as far as should you trade in the direction of the higher time frame, I think it's a good way when you start to slow yourself down and to be more concerned about alignment and a narration to detect change. It's much more important than actually even putting a trade on. What's the most important thing, I think, is to define what you think might happen and then define change, because we don't know what's going to happen. I certainly had no idea that we would take out yesterday's high. So that's not my thing. But I do understand that how markets work and only the possibilities. And if the market is short, remember how this works. Market goes up to go down, market goes down to go up. What we don't know is how far up, how far down. So, but the mechanics of the market in all time frames is the same. So when you get rotations, that's not, the market's going up, you can still get a profitable, but then you need to know it's counter trend versus aligned. So if I'm taking only aligned trades, then I wouldn't take counter trend. I trade both sides. But primarily, if I'm going to get short here, I'm going to be doing it at locations that make sense to me. And that would be value area, wherever that went. I think it's, there goes everything. It's going to be value area high. It's going to be ETH high. It's going to be levels where I just stalk behavior. I don't know where anything's going to happen. Okay. But if I try to look, this is the abbreviated session on Monday, Martin Luther King Day. Notice the symmetry, how we tested this. This was the high of the day. Notice this was the target. Now it was this and this. That's the low. Now, if that's the low and it's too low, I can come back and revisit yesterday's high, which was too high. And what's above it? Buy stops. And we got buy stops here too. Who knows? And a gap here. Boy, this graphics is having a hard time. Once I finish the squeeze, if I can't get further buying, then what was this buying? It's the short squeeze. This falling out of here. And if you remember on this day, I think it was, I can't remember what day it was. Let me just look here. This was a long. And this was the potential right here. This was Friday, but it was a 3-day weekend. So this day was the potential, and it was terrible volume. We held this level, which was support, and I was looking on this day for the potential to squeeze. And this was the target. Didn't get there, and then we had long liquidation. Then we had the Greenland news, and this was Martin Luther King Day, and all the longs in here were trapped. What do they do on the first full session? Tuesday. Hasta la vista, we're out of here. Too high. So we opened lower in a gap, came up, tested the fair price in here, highest volume, too high. Where's the next price to check? It's this. Now, the way I slice the market up is unique to me. Everybody does it differently. you can draw anything you want in any quote way to slice it. I tend to do it what suits my trading. And that is, I want to see the detail of the areas I might trade into. I'm not too concerned about what's happening in all of this until I get in the area. Then I'm going to tune it and tweak it a little bit. I'm more concerned, again, just a personal preference, about this and that. That's it. This is what I'm trading. And this. Now, if I go to a higher time frame, call this intermediate, the higher time frame is this out here, this black profile. And what it has is high volume there, in other words, a fair price. It has high volume up here. If it's too high, I can come back here. If I get under here, which may never happen, or it will happen some point, I can come there and here. If I get below here, I've got sell stops under here. So I can look at these sell stops are there. And if there's longs in here, sell stops are under here. I don't know if we're going to do it today. It's not my job. My job's alignment. So that's all I can tell you about it. I don't predict anything. I just attempt alignment. And again, it's not for me. Not for me to tell you what it'll do. It's for me to find a time frame that allows me, by the way, low volume area from yesterday. This is a single, and this is the retail price. This is poorly auctioned. We can just rip down here, and then we got to watch, okay? So this is now a neutral day, and in my opinion, and it's only an opinion, it's not worth anything more than an opinion, what we had was a short squeeze, which is why it was shorts for me. Does that make sense? Not saying it's right or good. I have no idea. Is this making some sense? So again, I don't know. How about this? Why don't you start out with the idea that you know you don't know, and then define conditions and attempt to stay in alignment. Typically, the way to do this is if this, then that, if not, then what? And what I didn't see this morning, and it wouldn't change most of these trades, is that we didn't get here. And then we squeezed. This was the open, and we started to squeeze. So I didn't see that, and you know why already. But this has a high probability of getting checked. I think it's around 60%. Don't hold me to that. You have to vet everything for yourself. And stops for the longs now are under here. So I have this, yesterday's volume point of control. I'm under the first hour. I have what's called the neutral day, and perception and not a recommendation. It's just what might be. We're in a bear market. Now, could be completely wrong, and it's just maybe. Because I'm trading the auction, I'm not, it doesn't matter to me. We're in a bear market, a bull market, or no market. What matters to me is the auction and alignment. So for me, the alignment is short until it changes, and then it's whatever. Intraday, it can be long, it can be short. If the dominant side of the market, where the movers are, who are going to use the short squeeze, which is what my thesis was for today, use the short squeeze for continuation. Is this logical? Tom Bonnet, for me, the overnight VPOC does not matter anymore because I have longs in the market. And it doesn't mean if we get to overnight VPOC that won't be the low of anything. That part isn't my job, okay? Well, my job is alignment, and then that's it. That's about it. This is the outside edge of the low volume area. And this is where I'm trying to go. And continuation down. So that's my thing, and sticking to it, Is it pretty? I don't know. Where's my next target? Take out yesterday's low, get here, take out yesterday's low, and continuation. And why might I do that? I got stops sitting here, and I got another naked volume point of control lower. And it's not a recommendation because it might never get there. That in trading, that's not necessarily the way this works. What do I know? Got the stops, got back here, couldn't get there, which was a possibility to fill this gap, didn't do it. Thanks for playing. You get a coupon to the buffet. Now, it's a question only how far down. And if I get under here, I've got this. Actually, I got this. That's where the stops are at the next level. And if I get under here, maybe there, maybe not. But if I clear yesterday's low, maybe down here. But at least, maybe, and I can't say more than maybe, what's under here? Sell stops. You see? This is a way to kind of think about the possibilities. Now we have a little rotation here. If we come out up here, we can squeeze a little bit. This is micro high volume. This is a distribution, too high, too low. If we come up here, we can return into here. If we can't get up into here, we'll rotate here. This is the retail price from yesterday. This would be the potential target. And again, potential is all you got. So it's trade management. But for me, I don't have a long in here. It could come all the way back up here, come around this. Now, I'm only telling you the way I do things. I'm not saying it's the best way to trade. It's my time frame. So my time frame, if I come up in here, I can just be out of the trade. Or if I'm managing the trade, I'm out of it. Doesn't matter. But I'm not necessarily taking a long here. Why? Already squeezed the shorts. Do I want to buy? I mean, what do you want to do? You want to get long? Would what be counter trend, Tom? I'm not sure what you're asking me. I mean, the overnight VPOC, for me, it's not relevant anymore. What's relevant now is the current auction. The overnight is the most recent auction prior to RTH open. So you have overnight VPOC, overnight mid, you would have ETH high low, those probabilities. And then once you have new input, new information, it kind of goes away. Unless they haven't been tested, but they're already done. Does that make sense? Would this be counter trend? The question, Tom, is time frame. For me, this is aligned with the trend. The move up this morning was counter trend in the time frame that I'm trying to align with. I attempt to align with the higher time frame, and I attempt to align with the dominant side, which doesn't mean, and intraday that changes. And that's based on rotations. So the market's going to rotate over itself. In other words, on each side of these rotations, there's stops on both sides, at outside edges. So as you go down in time frame, there can be more rotations and more noise and more squeezing. So I try to pull the lens out and then I take less risk, but get more opportunity. So that allows me to be more detached from what happens in the noise. When I'm trying to get a position on, I take a stop. As long as I know what my potential is and that it's outsized, I'm much more detached than if I'm trading for 4 or 5 points and I'm risking 3. That doesn't make any sense to me. So I don't do it. This is where I want to trade. I want this because now I'm getting paid. I don't know if it makes sense, but it's just something to think about. Taking out the previous day's high and low, does it skew my take? No. I'm trading the trend. So statistics, I think the idea about a statistic is what is the direction of the market? The trend is down. And we've had a major failure. This is not a small event. We have broken out of balance here. This is a balance area. So, and the buyers were here, okay? All the energy was under here. We got below it and we tested inside, which is not unusual. And you'll notice I didn't pull this over because we were outside it. And I had tested this and rejected it. So for me, this auction failed there. Now, the fact we squeeze and come back here is okay for me because I'm still looking to sell it. And if we don't take this out, we don't take it out. I'm not in the prediction business. But I do understand what creates this level and why it's important. And if I can get below it, which we might not, it's high volume. We might only come wherever we come. But I do know what's sitting here. I know, let's come back to what we know. I know there's longs in here, which is why we're going down, in my humble opinion. I know there's stops sitting there. That keeps me focused on the short side and the larger rotation. Long-winded answer maybe, but it's the only answer I can give you. I hope that's useful. So 9% probability of taking out the previous to high and low. I just manage to trade and trade the trend. And I don't prioritize the stats. I prioritize the condition and who's trapped and the higher time frame. And I have an opinion which isn't worth anything. It's very important to understand your opinions aren't worth anything in this business. It's what might happen. The best you have, and I always say this is maybe. Maybe it'll do this, maybe it'll do that. But all things considered, we notice I'm saying maybe, a substantial change in the market. And if that's the case, we're going to take screenshots of this. And it doesn't mean we won't squeeze and come up and test areas in here. It has nothing to do with it. So you just trade. I always like to look at it like I'm trading the squeezes in the rotation. It's always, where's the fuel? Today, the fuel's above us. Shorts, these guys. What happens now if they're gone? These guys. Now we get short in here, you see? Does that make sense? Yeah, okay. It's just, if this, then that. If not, then what? But this is not a business of prediction. At least for me, it's not. I spent too many years trying to be right, being actually concerned about it. And I found out that just because I had a lot of winners, but they didn't have an edge, that was not right. That was a process, a recipe for losses, in spite of the winners. You can spend your life trying to get more winners, but if the process doesn't have an edge, you'll still have the random winners and you'll still lose. So that's where retail traders get all hung up. Notice what happened here. Let's look at this. You see this distribution? This is high volume. This little thing here is the same as the higher time frame, but it's in a shorter time frame. This is the retail price right here. So too high, too low, retail. When I come above here, I can be out of this or some other trade management process, up to the individual. Let's come back to Bookmap, see what we can see over here. If we can see anything. Liquidity. This is the new retail price. Says at the moment what's above us is too high. Outside edge is here. So if you're looking for shorts, and this is not a recommendation, you'd start looking outside for reversion trading. And in alignment. Now, that's not a recommendation because it could do anything, But is the trend up or down? And where's the stops? And what about this? These are important levels. And this is a neutral day. So there's a couple ways to play this. Do you want to be long? Well, this would set up an IBF, but the best you would have is maybe back to here because it's reversion. For me, I look at this more as an opportunity to test here for a continuation down to here. It's not a recommendation, but that would be my trade if, and I'd take a stop with the best of them, right? So why would I take a short here and go for here? Because this is the new retail price. Let's come back. Let's see if I can see all this stuff here. I had my sellers here, break low, test, and my liquidity, you'll notice, comes in here, and my outside edge is up here. What is this? Mean reversion. Where am I going to try to go? Here, outside edge. And then, so the idea of the trade is, wherever you put it on, you put it on. And we know we had buyers here, and we have an order flow trigger there. Is it reasonable to come here and scale right there? Let's see what it does. So for me, here, there, out the bottom, or not. That's a trade. That's all I can tell you, because I don't know anything more. How can I? I can't. So for me, it's alignment, and in this configuration, I'm taking continuation trades and the reversals, which is, this is a reversal right here. Look at the sweep. No clue, by the way, the clueless. And subject to, when it comes, depending on how you manage your trade, right here, notice how this becomes support. This is an order flow trigger. Look across. Look what happens here. Break high. This sets up a long, which it's not for me because I perceive the trend is down. This suggests the rotation up. I come to an outside edge. VPOC shifts. I get the liquidity. I can sell this. Where are my buyers? There. So if I, depending on how I want to do this, see the buyers and this absorption, I can be scaling in here, or I'm just going to, get risk neutral, put my helmet on. I'm going to look for this outside edge. If I get under here, I can make a new low, maybe. I mean, if I can take this out or not, or this is all you got, or I rotate back around and I squeeze these guys out. There's nothing more to this than that. It's if this, then that. If not, then what? If I can't get below these guys here, where the buyers were, and the order flow, see, then I can come across the range. If I can get below the buyers, and the buyers here, see the sellers were here, the buyers are there, break high. What do I have here? The sellers are here, the buyers are there. So, there's enough range here to get risk neutral. And then you hang out. That's it. One trade out of thousands. Does that make sense? So it's not right, wrong. It's just alignment, and maybe it'll do this, maybe it'll do that. I don't know. And I don't care personally. I've gotten past the caring. The way I manage my risk is I look at where it fails, which would be here for the short. So I look at order flow and I look at absorption. And here's where it changes. Here. So this is support, sweep. This puts my antenna up for counter rotation. VPOC migration. Everything above is too high. Liquidity runs in here. The sellers take control here. And I have this. And these are order flow phenomena, support, resistance, break. I can sell it anywhere. Now, if you get adept at this, you're already going to be looking for the short. I'd be looking for the short out in here, you know, here, I mean, break through. Now I got support. See it? Opposite is over here. If I don't break through, and then I'm below this, all these set shorts up, stop's got to be out here, and this is your low volume node out over here. It's all matter. Now for me, I'm looking for my short out here. So I got a couple pieces. I got this on one side. I got this. And again, guys, if I crash, I will be back. Things are extremely tenuous here, and it gives me no warning. It just, by the way, it doesn't restart. It just goes away. Black screen. So there's none of this, oh, it restarted. No, not so much. Here's absorption. Now, buyers are here. This is your absorption. See how this is behaving? Sellers are front running the liquidity. I break above the liquidity. And what that often suggests is if I break here and I got my delta, there's absorption here. Now, I don't know it until here, because now my sellers who are here and there are below the buyers. This is a trigger here, and you can blow it up to a slightly higher time frame, and you're just gonna make this bigger but have more risk. And that's again up to you. But this is your outside edge, you know. And this, so you got this, and then your stop should be here, or it breaks, and look where it tests the bottom of the trigger. So you could be short there. If you're very adept at this, you could be short here. And then whatever it does, which I don't know where it is at the moment, but then it is what it is. So this comes and goes because of the problems here. And now you're watch this support. This is just order flow. Break, resistance. Maybe these levels will come back. So it's just short. I don't know. You guys get something out of this, guys? And again, apologies for the technical problems. So, I don't know what happened to the VPOC. So this is not accurate. VPOC is here, I think. Is that correct, guys? VPOC moved down. Is that right? To 52? Yeah, okay. I like that repeat. So we got this, and this is important right here. Right here. And if we can't break low from this, we can revert. And that's time frame again, time frame specific. We did get under the IB. Okay, we have a neutral day. So when you have this and you see the buyers, up to you, you could be out. You come up here, you have the sellers, you could be short, and these are rotational trades. And the idea, remember, was to come to the IB, this. So, again, your trade. If you get into shorter rotations, I believe you have more opportunity for FOMO and errors. If you try to pull the lens out, you're going to trade less, and that gives you time to anticipate the location. It's not anything anybody needs to do, but if you slow down, I think it gives you an advantage as a developing trader. There was a time I was a high volume NQ trader. different business. And that was already after being in the business 20 years. So, but before I would do that, I would need to be in the business that long. So, and that was during the dot-com bust. So it was very interesting and a lot of volatility and a lot of range. But NQ is definitely not a place for developing traders, in my opinion. But you need to slow yourself down, and you're going to have a lot more stimulus psychologically in a rapid moving market. So, gold and this kind of stuff, it's not good. In my opinion, I'm only giving you an opinion for developing traders. You really want depth, and you can certainly do quite well in the ES because it has the range. But it also is a safer market for getting skidded. So you have better risk management. So it's just a matter of finding your niche, It's not a right or, again, it's not a right or wrong. Greenhorn, bomb technician. The thing about this laptop, it doesn't tell you anything. It just disappears. So there's no warning. And it's not heat, just as a side point. It's like 90 degrees here, but it's not a thermal issue. I've already done deep dive in this thing. And it is definitely hardware. So look at the behavior here. Too high, sweep, counter rotation. What do we know? If this is accurate, I think it is. Too high, too high. If it's too high, here's my press. Skew the book. Where are we trying to go? South of the border, right? Is everybody seeing this? Now, I don't know what's going to happen. So I just really want everybody to understand. This is a business of alignment and not prediction. When you're out of alignment, you're going to get pushed out of your trade. You won't know if you're out of alignment until hindsight. So you have to anticipate where behavior might take place. And that is how you slice the market up. I slice the market a certain way, as you guys can see. Even with my composites, I slice the market differently than other traders who post here in TraderLab. That's why there's no right or wrong. But anytime anybody posts the market will do something, that's kind of naive, and you shouldn't follow that, because there is no what the market will do. It's always what it might do. So it might do this, it might do that. We might find buyers, over in here because the buyers were here, right? Wouldn't you know that? Wouldn't you know if you have a sweep here that you might get a counter rotation if it doesn't go down? And wouldn't you know if we come back across the range that we can come up here and squeeze these guys, right? Wouldn't you know that? After that, do you know anything else? If you do, DM me, because I don't. I know what it might do. I know where it might do it. I know how to enter the trade. I know how to manage my risk. I attempt to get risk neutral based on the structure in front of me, and then I manage the trade, and whatever happens, happens. If I get pushed out of the trade, I'm going to look at another location outside, further outside, and then look for behavior. If I get it, I'm then going to put the trade back on, unless it violates structure, for the same trade from a different location, which is mean reversion. I only have shorts, and it doesn't mean we won't go up 30 points from here. It has nothing to do with it. Here's what I know. This is too high. This is too high. I fell out. This is my outside edge. If I push out here and I get through this outside edge here where I had my last sellers, I can squeeze out here. That's what I know. If I come out in here and I exhaust and it's only a short squeeze, which happens in all time frames, I'm going to be looking to sell this. Not a recommendation, because that's mean reversion, you see? And if I can't get outside of here, which is a VHVN, I can also come back across the range. It's two-sided trade. So already I know, and again, just for me, that I want to be short, and that the only trades at the moment, subject to change, is mean reversion shorts. That's what I know. That's it. And if it pushes out through here, this low volume area, then I'd be back in the Barca lounger, and I would wait just to see the behavior, because the outside edges are where the stops are. which is there. This. So this is the last place I had my sellers, right? So if I squeeze above these guys, I have to look left over here. So I got this and I got that. So if I get above here, I can look to sell it, but I have to always look left. If you're trading mean reversion, you must look left, because if it squeezes, you got to be aware of where the stops are. It's no different than taking out the high of yesterday. That's where the stops are. As you go down in rotation, it's the same behavior. Where's the stops? They're out here. They're out there. And what's this? My variable high volume node. What happens if that's too high? I can come down. If I get above it, I can go up. That's what I know. Can I know anything more than that? I can't. Are you guys getting something out of this? This is Trader Lab, and this is just a way to slice and dice the market. Keep it simple. You're in a random environment, so why make it complicated? It's random. Doesn't have to be complicated. We make it complicated because we think in complexity we can get predictability. It's the opposite. It needs to be simple so you can process the information right in front of you. And you do have to also be able to operate in a couple different time frames. You don't have to do a lot, and you certainly don't have to be trading this kind of stuff like this. This is not, at least for me, something I want to do. I use these more for trade management and recognizing where behavior might change, which is here. So if I know this is my resistance, my stop can stay up here and I'd be risk neutral. And I'm holding for take out the bottom here. And if it doesn't do it, okay, right? How do you grade yourself? Do you really think this is a business of profits? Let me tell you what it is. It's a business of edge and following your plan. When you come to market, you don't know what's going to happen. You need to know where it might happen and what you will do before it happens. Not ask yourself, what should I do? The answer's not here because you're operating in randomness. The thing that can't be random is what you do. So you have to define behavior, and I use a conditional statement. And I always like to say this. I built trading systems, and it was all conditional. If this, then that. If not, then what? So if something was true, you'd run down some branch logic. This, and this. If it changes or it's no longer true, then you're no longer taking that trade. Then the trades you were taking when it was true no longer are qualified. You're not taking that trade. So if this is too high, then I can take a look for down here. If I get squeezed out, where would that happen? Here. What would that tell me? Get long? It wouldn't for me because the trend for me is down. What it would do for me is stop me from taking shorts there. And I'd look for the squeeze to put the short back out again, come back here, mean reversion. I'm trading reversion. That's the thing. So I always say in Trader Lab, what's the primary trade to learn? It's mean reversion outside in trading. When I was selling, which was my plan, and again, I'm not trading live from Costa Rica. You guys already know why. My trades would be shorts, and that was my primary trade other than one long. Once the long was completed, it set up those shorts again. And that's what you're seeing right here. Nothing has changed. It's just location. So it changes, I change. If something becomes not true, I don't continue with it. I wait until it becomes true, or the longs become shorts, then I'm back on the shorts. And if these shorts become longs, I can either be on the longs or back in the Barca Lounge or no trade. It's my time frame. I know this is confusing. By the way, the fact you see a green delta, oh, okay, without movement. Yeah, well, here's where you want to look at the delta. This is absorption. Look at the delta here. And let's look at this delta right here, how we might use this. Now in the Trader Lab, this is structure. This is the retail price. If it's too high, And the high volume moves here. If you think of this as shopping, which is kind of what it is, the auction, I have too high. What happens here? Liquidity comes in the book. The buy delta interacts. These are probably icebergs absorbing. I have my sweep here. This sets up a potential short. This is a short against here. And your stop could be above here or above there. And then you're going down. And now it's trade management. That's a structured trade in the Trader Lab. This is a structured trade in the Trader Lab. I don't remember the rest of them that we had up here, but we had them. And short, short, short. That's it. This can be a short. Short, short, just shorts. Not saying it's any good, it's just a short. Now, here's the thing. This might be the low of the day. And I'm not saying it is. I say it might be. Here's why. Outside edges here. High volume is here, and the buyers took over. This is your outside edge. If we're trading reversion, then we're trading outside here or here to there to the outside. And the target, remember, was the IB low. We're trying to come here on the reversion trades. If I can clear the IB, then I've got the potential to come down here. If I can't at this time get below this, I can rotate up to the other side. That's reversion. So if we think the trend might be down, then you might only take the short side and use the long side for trade management in your time frame. So subject to your time frame, you might just take the shorts, get risk neutral, and leave your stop out here and scratch because you're going for something this. Notice where the liquidity is. See? So this is a statistical probable target. What we don't know is, are we going to come outside up here before going down there, if indeed we do. Does this make sense? So it's not what it will do. I always want to say it's maybe. Best you have is maybe. Maybe it'll do this. Maybe it'll do that. Maybe it won't do any of it. And where might it do it? How can you anticipate it? And then what do you do about it? And we're all fearful. I get it. You do too. We all want to be sure. We don't like, quote, losing money. I understand. Guess what? Casinos have an edge. They extract the dollars from the gamblers. And guess what they do? They pay to gamblers. Are they losers, or is it overhead and cost of production? You have to reframe here, because in this business, if you take a stop when you follow your plan, you're still a winner. If you don't have a plan and you take a stop, you're going to experience it emotionally like a loser, because now you are gambling. So I always say, if you want to gamble, go to the casino, get the cocktails and the ticket to the buffet. It's entertainment. You know why you're there. This is not entertainment. This requires skill, self-discipline, and a plan. And the idea about discipline is actually executing the plan. If you don't have a plan, then you're sitting with the gamblers. And I suggest you don't put real dollars in the market, that you vet and find one trade. One structured trade that you can make your own, that you are intimately familiar with. So when you see it developing, you already know what you will do. Then you need your trigger. And then you'll either take a stop like the rest of us, or you're going to get risk neutral and you'll do your thing. This is the target. If it takes this low out, you know. And it can come all the way back, you know, it could do anything, right? Are you guys tracking? How we doing? Am I still alive in YouTube? I have no idea. And by the way, guys, if you're visiting in YouTube, I'm not able to see your stream. Apologies. I only have one monitor working here instead of three. And I have a crippled computer, so it's been really problematic. So I appreciate your patience. Also, I have to remind everybody, there is a webinar exclusively in Discord that's going to be taking place immediately after this in about 10 minutes. If you attend the live webinar, and it's about institutional order flow trading with Scott Pulcini, 3 attendees can get a license, a 6-month license to Global Plus, and you have to attend the live seminar or webinar. Data not included, but there will be 3 winners, and you need to come. If you want to register for that, use the link in the bottom of YouTube, or if you're in Discord, go over to the events, go in there, join that, and you'll have the opportunity to win 3 Global Plus 6-month license to Global Plus, and there'll be 3 winners. So, and if you're in YouTube, use the link in the bottom of YouTube, register. All you got to do is verify your username. You won't be solicited or otherwise abused. You can also participate in Trader Lab, which is a community of like-minded traders that come together to leverage their collective experience. It's about the business of trading. A lot goes on in Trader Lab. It doesn't matter how long you've been trading. What matters is you actually want to make a career out of this, and you're going to have to roll your sleeves up and go to work. Probably have to take a lot of the things you believe about trading and maybe adjust them to what trading actually is, which is probably different than you think it is. Is this making some sense? You guys get something from this? So now we're getting our counter rotation. So where do we go? RIB. So that's primarily what we were looking for. Doesn't mean anything. Remember why. The buyers were here. There they are. We have a sweep. The buyers are still there. We rotate up. The buyers are here. Where's the sellers? There. The buyers are here. You see how you can see this? Now, is it going to break through? Different question. When it comes back above here, then where's our sellers and where's our stops? Out here. If our stops are out there, and notice the sellers are lining up again, where's our outside edge? This is what mean reversion is. If this popped up on your Bookmap, use that link. I was getting a question about a link. If you're visiting in YouTube, you can use a link in the bottom of YouTube, and you can get yourself over, register, and confirm your username so you can go to the Discord chat. You'll see an events section, and you'll also see, I believe, a link to this seminar that's going to start right after the end of this in 7 minutes. Maybe somebody can confirm that.
To tell you about it in 7.7.
Is this the correct? I just started streaming. Is this working, Dan? Do I have the right one? Scott,
No.
Maybe if you can talk a little bit. Hello, hello.
Hello.
Yeah.
Same issue. Work, not work.
Dan.
I'm not seeing it live in studio just at the minute.
I might have picked the wrong
It's not
stream.
coming up in the studio.
Okay. Hold on a minute. I'm going to stop the stream. I'm sorry, Dan. I might have messed up the streaming somehow there. Okay, I'm going to stop it.
Did I already get preempted? Is the other one? Okay, guys. Well, I can't tell if I'm on in YouTube or not, but we got 6 minutes till it starts. If you're still in Discord, this is our outside edge. That's that low volume node. There's our resting liquidity. This might be a trigger. Let's see what it does. You'll notice that we got above here, which is where the stops were, and now you have to observe this outside edge. This is what mean reversion looks like. I'm back on. Did I drop out of YouTube or was it only in Discord? Oh, it's good. It's nice to know. Thanks, everybody. So what is this? Buyers. So this is the sellers. Here's the sellers again. And what do we know? Outside edge. So what might this be? It might be reversion, and that would be where you'd be trying to go. Let's just look out to, remember what I was mentioning. You got to look left. Where's the stops? There and here. So this is the area for a reversion trade here. And if this trade gets back here, and then I have my stops under here, if it does, then I can continue on my merry way, you see? So this is kind of the way you might think about it. And reversion trading is outside in. That's why this is outside down to the IB. This is outside down to the IB. This is the squeeze above here. There's the sellers again, and I have stops here. I know if I get above here and my resistance is here, look at the order flow there and the order flow coming in here. So I'm using the order flow and my understanding of potential rotations and the way the market often operates. And that is reversion trading back to here, and then maybe out the bottom or wherever it goes, it goes. That's basically market mechanics. And the outcome is always random. Is this making some sense, everybody? Can you see why learning reversion might be the most important thing you do? And here's the other piece about reversion. Let me just try to. This, if we get here, this is reversion. So if I come outside, I can come back here. If I fall underneath, I can come back here. They're all reversion in different time frames. Hope that makes some sense. Guys, don't forget about the seminar coming up, webinar coming up right after this. Use the link in the bottom of YouTube. If you're visiting in YouTube, please give a like, subscribe to the channel. There's a lot of additional education, stocks, options, crypto, order flow with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, a lot more. And it's all available to you at no cost. All you got to do is confirm your username in Discord. Keeps the riffraff out. And if you're interested in Trader Lab, it's a community of traders that have come together to leverage their experience. It's not romper room. It's a serious environment. It's about the business of trading and potentially establishing sustainability. In other words, the business. If you're interested in the business, then you might want to visit Trader Lab. Let me just put this up for you guys. And remember, if you attend this webinar that's coming up, 3 Global Plus 6-month licenses are going to be given out, but you do have to register for the live session. That's starting right after this one. You're all invited. There's no cost for it. This is the Trader Lab here. If you're interested in Trader Lab, this is what it looks like. There's a lot going on in here, and it's open to all of you. All right. Thanks, everybody. Thanks for visiting Trader Lab today. I look forward to seeing you guys tomorrow. And thanks for your patience with the technical issues here with streaming from Costa Rica. And this is about how institutions move markets. It's an order flow breakdown. And use the link in the bottom of YouTube or in YouTube if it's there. Register right away. You can win 6 months of Global Plus. You must attend the live webinar, and there'll be 3 awards given out. Thanks, everybody. Please give that like on the way out. Thanks so much for visiting the Trader Lab. I look forward to seeing you guys tomorrow.